The Hang Seng is down 0.3%. So is the Taiwanese index. The Nikkei is down around 0.6%.
The short-term daily moving average, which is 24,045.
So that's the stock I'll keep an eye out, particularly because you're getting some valuation comfort.
The 23,752. It's absolutely flat.
We are in a situation where, to a large extent, in my view, macro has bottomed out.
Demonstrated that we have an appetite for growth and we have cemented our leadership position in the market.
We're at 23,550, sensex down 500 points.
They're saying that 2025 will be a year of recovery for the Reliance Industries cycle.
We'll be opening around 180 showrooms in India and abroad.
Color on the screen is red. The mid-cap and the small-cap indices are bearing the brunt of the selling pressure.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and what a day it has been. Although I must say that after all that has happened over the last few hours, we are basically back at where we started. The market started at 23,700 roundabout, fell to 23,500, and we are almost back to about 23,700 as we approach the last 60 minutes. This is Closing Bell. I'm Prashant. With me, my colleagues Rima and Surubi here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. And briefly, we were in the green as well for the Nifty.
Absolutely. What a recovery, right? From about 1 o'clock onwards, because at one point in time, the mid-cap index was collapsing almost 2%. Yeah. Nifty was down quite a bit. Let's see. I mean, 60 more minutes to go, but it's been dramatic to say the least.
Well, that's right. And the big boy has put his hand up today and got counted. If it wasn't for Reliance Industries, we could have easily been down another 50 points or thereabouts. So that one, after underperforming in 2024, at least the start of 2025 has a couple of bright spots for that one. So that's holding one end up.
No, absolutely. The biggest contributor to gains by far. So just a quick couple of points. Very sharp recovery, but it's largely large caps. So yesterday, the broader market was doing much better. Today, the broader market is a bit worse off. So you look at mid and small cap indices. They're off the lows, but both those indices are still down over 1% or so. Now, large caps, Reliance is the biggest contributor to gains, as we just sort of discussed. Nifty broke, actually both the Nifty and the Bank Nifty broke recent lows. Nifty broke 23,551, but has bounced since. Bank Nifty broke 49,751, but that has also bounced since. Although, the bounce on the Nifty has been much larger. And as I said, the broader market, unless I looked at the prices about 10 minutes back, and both mid and small cap indices were down over 1%. And I think that is the reason why, even though there is a sharp recovery in the broader market breadth is still negative. Not quite, not fully 3:1, but close to about 3:1 in favor of declines. Number of stocks down much larger than the number of stocks which are trading in the green. Prima.
Well, IT has seen quite a stunning recovery. The Nifty IT index is still down about 0.1%, but it's pretty much recovered about 1.5% from the day's low. That's the Nifty IT index. TCS is up in the green ahead of its numbers tomorrow. Pull up TCS, that's up nearly about 0.5%. Outside of that, the other oil and gas PSU names, so Reliance Industries is up, but PSUs like ONGC higher for the second day in a row. That's the top Nifty gainer, 3% up on that. BPCL is up 1.5%. And then you've got strength coming through in Asian Paints. That's looking up. Dr. Reddy's on the back of the Nuvama upgrade. Bharti Airtel, where HSBC has raised the target price, is higher in trade. And then you've got a Maruti Suzuki as well. Throw that in the winners list.
Absolutely. So pretty interesting and looking better now for the Nifty. In the broader market, a couple of very interesting trends are playing out and some outsized reactions as well. We will bring in Abhishek in just a bit to talk about the moves that we're seeing in small finance bank stocks as well as MFI stocks. I just want to take some names to give you a slice of the action. Look at Credit Access right now. 15% on the higher side. And not just this, if you're looking at the top volume charts in a Ujjivan Small Finance Bank, for instance, up 3-4%. Plenty of other movers as well, up and about. As we're looking at the gainers tally, Spandana Spurti is about 18% higher. There is some excitement, it seems, ahead of a meeting that some of the MFI lenders are going to be having with the Department of Financial Services, and Abhishek will tell us more about this. Could be a reason why the market's getting quite excited. That's one. But then you have, like I said, some very outsized moves today. Real estate would be a case in point. Ashiana Housing, where the Q3 update has been good, has been flying up 6-7% higher. But on the other hand, look at Asoba. Asoba has been punished hard. It's down about 5-6%. So very, very specific moves being triggered by some of the Q4 updates. And then you have some other names like Shoppers Stop, 7.5% up on this one as well. Haven't seen that on Shoppers Stop in a while, but interesting moves in the mid-cap space overall. But Nigel, I guess, looking better.
Well, that's right. Credit Access Grameen, I wonder what the Goldman Sachs group will be feeling about this, because they'd come out with that sell call. I recall they had a target price of more than 1,500 rupees, which they cut to around 600 rupees in late November itself. Stock saw a sharp correction from there, and just take a look at it. Last couple of days, I think the stock is up more than 20%. At least in the last 5 days, it's definitely up more than 20%. So big move is what we are seeing. And just one more stock I'll keep an eye out on is ITC. For those that wanted to buy the core business, X of the hotel business, today the stock went to a low of around 437. And from there, it's seen a good bounce. So just keep an eye out on that name as well. That's moved up in trade. And just one more stock I want to highlight is Phoenix Mills. Come the end of this month, well, that will be available for trading in the F&O market as well. And we're just seeing a big spike up in that one. Volumes as well rather high on Phoenix Mills. So intraday chart comes up for you on the screen. Mitesh Thakkar is back with us. Mitesh, what's your call? You got that intraday dip today, but that dip got bought into, and it seems the bulls want to defend that 23,500 odd mark. How do you trade it?
I think two levels. One, 23,500 on the Nifty, and 49,700 on the Bank Nifty. So we had this in mind that if we don't sustain above 50,500, 600 on the Bank Nifty, we'll test 49,700. And the closing below that would suggest further decline. So at least we have bounced back from there. As of now, it seems like we might close above that. So, I think we had some put spreads on the indices. We've taken profits over there. But the structure and the weekly charts are still weak, are still negative. So my sense is that on a pullback, I think, at slightly higher levels, we'd still want to short or, get into put option spreads or negative spreads on the index. So that's the way we are approaching it. Exit your book profits on your negative positions, wait for this bounce back to play out, and then around higher levels, 50,400, 500, the Bank Nifty, similarly 23,775 to 820 on the Nifty, I think is the range where I would want to get into negative bias positions again.
And your stock picks?
You have a buy on Berger Paints. That's after, very big decline. The stock is trying to recover. So buy here with the stop at about 454 for targets of 475. And on the stock side, I think, Bank of Baroda is something which I have a negative view upon. So sell here with the stop at about 239.5 for targets around 220.
Thank you very much for that. Let's talk about United Breweries. That's the one which has seen a big fall of 5% just in the last few minutes. This is after the company announced suspension of the supply of its beer to Telangana Beverages Corporation with immediate effect. Mangalam is here to tell us more details. Mangalam.
Well, so the development has taken place as, the Telangana Beverages Corp, which is basically the state of Telangana, has not revised the price of beer for the company since 2019 to 2020. And as a result of which, the company was making loss on every bottle of beer that it was selling to the state of Telangana. And because of this lack of revision, the company has gone ahead and decided that it will suspend supply of beer to Telangana Beverages Corp or the state of Telangana itself with immediate effect, because this business has been rendered unviable. So Telangana, accounts for about mid-single digits of their volumes as per analysts. And if the company were to stop it, in the very near term, there would be a hit on the volumes. But on the other side, this would be a positive from a profitability / margin standpoint, largely because they won't be selling more of the product on which they make losses. Secondly, there is the question of receivables. So, as of September, the company had a total receivables of close to around 2,400 crores on their books. A couple of quarters ago, on the analyst call, they did say that there could be around 900 crore in terms of receivables coming in from Telangana. Is that at a risk? And that's something, the street was fearing, because of which the stock is down about 5.5%. Turns out not, because the company has obviously sold the product to the government, and at the same time, there is no risk of them not getting that money back because there are legal recourses available for that as well. There is a clear sale agreement and a sale deed that has taken place for which receivables haven't come by. So there is no risk of receivables being lost. And at the same time, were this to happen, either the company, the state goes ahead and increases the prices or revises the prices for beer, which in turn is positive for both volumes and margins. If it does not, then it's negative for volumes but positive for margins. Having said that, the uncertainty is something that the street is not liking, and as a result of which, that's weighing down on the stock. But from a medium to long-term standpoint, this isn't a negative.
Okay, thank you very much for that. Karan Tarani, Senior Vice President and Research Analyst at Elara Capital, is now with us. Karan, have you all spoken with the management of United Breweries on this Telangana issue? Because clearly it's been a problem for a while now. And what has been the communication with the management? And how big a problem is this?
So I think, in terms of problem, it's quite big because Telangana is a big state, for UBL. AP has just opened up very recently. And because AP was not, opened up in so many years, you did see Telangana volume kinds of increasing. And now in terms of volume market share, Telangana could contribute anywhere between 15 to 20% of volumes for UBBL. And they do have a sizable market share in that state as well. They've got, 60% plus kind of market share over there. So I think this suspension is going to be a near-term negative. But I think, these kind of issues do come in, because the alcobev industry as such is regulatory in nature, and they do get resolved within 2 to 3 months. So I think if at all this issue is resolved within 2 to 3 months, and, these companies do end up getting a price hike, it's going to be a bigger positive. So I think it's a near-term negative for now. But yes, if the price hike does come in, which is a high likelihood event after the suspension over the next 2 to 3 months, it is going to be a positive for the overall margins for UBL.
What about the issue of receivables?
Yeah, so I think issue of receivables is there. It's there. It's been there since some time. It's nothing new. I think since the last 6 to 9 months, there has been a massive delay. So as per our assessment, I think this entire issue of receivables had kind of, resolved, in terms of time frame. So I think around the month of March, April, the receivables time frame was around 3 to 4 months in terms of delay and lag of payment. And around August, September, the time frame did come down to 2 months. But I think as per our checks right now, companies haven't received money since October 24. So that's around 3-4 months again. So the lag time has kind of increased, and that's another thing, which is hampering prospects of these companies in these states.
Okay. That's the issue that's bothering the stock today, this Telangana overhang that's new. But Karan, hi, afternoon, by the way, Surbhi here. But even otherwise, beer has not been very hot business, at least in the listed space, right? Look at what UB's done in the last 12 months. Stock's not gone anywhere, very, very range bound. Though they've been talking about premiumization, they're talking about bringing newer brands. I think Amstel was something they announced towards the end of last year that they'll be sort of introducing in the Indian market. What's the bigger story on United Breweries? I mean, and what's your call? Buy, sell, hold, or no view?
Yeah, so we have an accumulate rating on the stock. I think the stock in the near term has got pressure in the form of margins because they're investing very aggressively in the premium beer side. If you look at the market share, I think, UBL as a company has tried to gain market share in the premium beer segment since many years. But it is only after Heineken that they've been able to gain market share over the last 1 to 1.5 years, which was not possible since the last 5, 7, 8 years when you had the old management come in. So I think you have to give it to them that the margins being lower are primarily because of the market share gain which is happening on the premium beer side. I think it's a structurally, fundamentally positive, if you gain market share on the premium beer side, because that segment growth rates are almost 2.5 times as compared to what the regular beer segment growth would be. And it's very tough to kind of, shake up the market. AB InBev has been a market leader on the premium beer side since many years. And somewhere they've been able to gain market share on that as well. So I think if the premium beer market share momentum continues for another 2 or 3, 4 quarters, probably, after that, you could see margin improvement as well. They'll kind of, try to pull back on A&P spends because then, the product becomes more of a pull demand side sort of a scenario in the premium beer segment, which was not the case all these years. So I think clearly it's a good strategy and, we have an accumulate rating on the stock. We like the story of premiumization. Margin concerns are there in the near term, but over the medium to long term, the prospects remains to be strong.
All right, Karan, just a quick couple of questions in terms of numbers. 60% of the Telangana market is what United Breweries holds, right?
Yeah, so they have got a 50 to 60% kind of market share in Telangana.
Got it. As a percentage of their total revenue mix, how much is Telangana?
So as a percent of their revenue, it's around 15 to 20% of
15 to 20%
today. It's a large market, yeah.
Got it. And what could the outstanding receivables be?
So receivables is not known as of now, but yes, it could be anywhere between 500 to 700 crores outstanding right now, and that's coming with a lag of at least 3 to 4 months. So that's been another concern apart from the price hike that they've been wanting since the last 6 months.
All right, Karan, appreciate your quick thoughts and sort of first take coming in on the United Brewery stock, which is taking a bit of a hit. I'm wondering, on a lighter note, companies stop 60% share. If you stop supply of beer to a state, could it be? It's a serious issue from a consumer.
And the market's taking note of it. The seriousness
for the
is
company,
apparent.
but for consumers.
Yeah, big problem, extremely big problem.
Absolutely, Nigel agrees strongly.
I agree. There was a time, Prashant, since you're talking about beer, I used to go to Goa just to have that people's beer. Luckily, now you get it at home. I mean, down the road as well. So happy to pay 80 rupees in Goa, 180 rupees down the road. But your beer is imported, particularly over the weekends.
Okay, well, we'll talk more about these the beer, etc. in a bit. Prakash Devan is also joining in. Prakash, welcome to the program. But let's welcome in Abhishek as well, who's standing by. And we will talk about, I think, Abhishek will be with us in just a bit from now. And we'll talk about MFIs, right? I mean, microfinance companies are all surging. Look at names like Credit Access. It's jumping. It's of course maybe the best rated, best quality MFI name. But look at Fusion, look at Spandana, and a few others as well. Prakash, welcome to the program. Just a quick word on the market itself. I mean, it's 200 point down now, kind of come up to being absolutely flat. Any thoughts?
So, Prashant, quickly, what I can tell you is that the market doesn't seem to have very wholehearted participation, especially on the institutional side. Two reasons. One, that explains that FIs were probably waiting to figure out what's going to be the fate of the US markets vis-a-vis the emerging markets to really figure out to start looking at allocations in a serious way. And I think the domestic institutions are also wary of the fact that we are going through some very volatile, uncertain times in terms of flow of events. February is going to be loaded with so many things starting from first itself. And when you start coming close to a little bit of the end of your dry powder, of course, there's still SIPs and all that keep coming in. But you wouldn't want to waste it just because, the FIs are selling or things are available. So large caps also have been taking a little bit of a hit. And that's exactly where the indices are not stabilizing. But there's amazing amount of distribution that's happening in small caps. If you look at the advanced decline ratios last 7 days, it'll tell you the real story. And especially for companies which are below 2,000 crores market cap, there's actual distribution that's seriously getting a lot of offloading that's being visible in the market. So these are not times where markets can perk up very easily in spite of any good news coming through, which hasn't been very commonplace also. So I would believe this will go on till at least the end of this month, till the Donald Trump administration actually gets into power, gets into office and starts making announcements beyond just changing names of geographical assets and all of that.
Let's get to the surge that we're seeing in microfinance companies today. Credit Access Grameen, Spandana Spurti, all up more than 10%. Abhishek is now joining in to tell us what's driving these stocks higher.
Well, Rima, sources do tell CNBC-TV18 that Department of Financial Services is holding series of consultative meeting with lenders, from Jan 7 to Jan 16. So DFS is holding discussion with fintech, MFI sector, amongst others as well. So meeting is being called for understanding issues, industry feedback. So and Alok Mishra, who is the CEO of MFin, is attending the meetings as well. And top 10 MFI players MNCs in India are attending the meeting as well. Now, sources also do tell us that the likely ask of the industry to the ministry is that there must be an easier repayment schedule. Now, there is a concern of over-leveraging, and that has to be played out with respect to repayment schedule being eased, and make available funds for the sector, that is for the lenders to borrow from. That should become a bit easier, with along with the fact that lower cost of borrowing for them would actually help them in passing it on to customers as well. We need to see how much of these do get accepted, given the fact that this time the concern with MFI industry is of its own and not due to any natural calamity like floods, etc. Back to you.
Okay, all right, got it. Thanks for that, Abhishek. So that seems to be explaining the excitement and the exuberance around many of these MFI stocks, if they get some sort of a breather, some reprieve, some helping hand from the central government. Prakash, afternoon, good to have you on the show. Let me expand that point to, financials overall, and the view seems to be very, very mixed. Some of the NBFCs have had decent Q3 updates like Bajaj Finance. But on the banks, there is a wide debate on loan growth is slowing down as they shore up deposits. MFI, we've just discussed. What would you buy? Any picks in BFSI?
Good afternoon, Surabhi. No, absolutely. See, the situation seems to be very clearly divided between the conditions of the banks or NBFCs that have been predominantly growing because of unsecured loans, personal loans, and of course MFIs as well in that bunching up. And the other side, you have banks which, the larger banks, the private sector banks, some of the well-run PSU banks as well. I don't see any, crisis of confidence in that pack, Surabhi. It's just a question of credit growth not being as high as you would like to see. But look at each of these banks have been focusing on tackling their own, specific challenges. Kotak had its issues with technology and with the KYC backend kind of processing. You had Axis, which was integrating with Citi and then trying to rebuild from there on. And of course, HDFC had its own share of issues related to the loan deposit ratio. So I think barring that, there's nothing which is very upsetting about the numbers. The slowdown with the GDP numbers are telling you is going to be reflected in Q3 as well. But that could probably be the end of this pain. And come first quarter 26, FY26, things could look very different. And if the government ends up announcing things in the budget which are expansionary, there's no reason why credit growth, which is the only questionable thing and metric in the current updates, could start setting itself right. So they are available at very good valuation, and you can't expect the market to do well without banks really catching up on that. So it's bound to happen, but stay away from the ones that are too much dependent on personal loans and unsecured loans, because that's where the pain is still likely to last longer.
Okay, all right, Prakash, stay with us. The other bunch of stocks that are under pressure today are EMS stocks. They're under pressure because of fears of increasing competition. Upasana joins us to fill us in for more details on that front. Upasana?
Well, certainly, CCI has approved Tata Electronics acquisition of a majority stake in Pegatron Technology India. Tata Electronics will transfer component business to Pegatron India. Now, let us understand what Pegatron India exactly does. This company is a subsidiary of Pegatron Corporation, and Pegatron India is engaged in provision of electronic manufacturing services for smartphones like Apple Inc. and exports products to countries like North America, Asia, and Europe. Now, one of the notable development previously is when Tata Electronics had acquired iPhone unit of Taiwanese company named as Wistron in Bangalore for $125 million in November 2023. Well, on back of this development, we are seeing all the EMS stocks under pressure, mainly due to competitive pressure. Now, looking at the valuation, Keynes Tech tops the list. Highly expensive stands at 97 times, followed by Dixon, which stands at around 90 times. CG Power stands at 72 times, and Syrma SGS is one of the cheapest in the basket with a valuation of 45.7 times. Hence, all these stocks continue to remain in focus on back of this development.
Thanks a lot for that, Upasana. Well, let's hop across to Prakash. Prakash, what do you make of this? Today, the stock's a little bit jittery. They've been big outperformers, and they have the industry tailwind. But now these fears of competition, how are you reading it?
So Nigel, it's quite surprising that this is such a big alarm bell. I mean, this was competition would always come in. Tata Tech has got approval. They will continue. Pegatron will continue to focus on Apple products. There's really a vast ocean available out there in terms of what other EMS players can do. But the real culprit is the high valuation. So the market probably just needed a excuse to correct, taper down some of these high valuation, which are unsustainable. Because most of them are trading at multiples which will take them years to kind of justify even on a PEG basis. Right? So my sense is it's just a trigger that's helped the market book profits. But otherwise, this competitive intensity is something which you don't need to be alarmed with given the potential size of the addressable market that's available.
There's one more news flow, I think, from Bloomberg. It says, and I don't know if you're putting this out, but Foxconn and Dixon are urging the government, Indian government, to pay pending PLI subsidies. So this is what is coming through. Remember, PLI 1, that is coming to an end, and I don't think there is no extension to that. There's a components PLI which is separate, and I'm not sure if this is also perhaps this is something which is at the margin at play. So it was $4.8 billion in subsidies. Dixon, of course, was a big beneficiary of this, and that is what is coming through. We'll try and get in touch with the company as well and ask them what is due, what is outstanding, and what seems to be the issue. We'll slip into a break. Prakash, thank you again for joining us. But we're also counting down to Budget 2025. The government is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be the NDA government's first full budget after the election victory, will be key to unlocking the ambitions of millions of Indians. So tell us what you want from Budget 2025 by submitting your wish list to CNBC TV18's Budget Box, and tune into your budget headquarters, CNBC TV18, for unparalleled insights and coverage in the budget day this 1st of February. It's a Saturday. Okay, welcome back. Pashupati Advani is now with us, founder and chairman of Global Foray. Pashupati, good to have you with us here. Good afternoon. Thanks for your time. It's good to always see you, and seeing you for the first time, I think, in the new year. So wishing you the best. Pashupati, the big call on RIL, if you have one, and if you own the stock, and stocks fallen relentlessly, right? One of the big underperformers of 2024. Slowly, I think sell-side analysts are starting to come out with calls saying, well, it's cheap. time to start to buy. Any thoughts here? RIL.
RIL, I know they own a significant chunk of your channels, but I will say that it has got hammered because the results were not that great last time. But I think there's a talk of trying to list Jio shortly, and I think that will be good internationally as well. And but I think it has come as a shock. I mean, went below 1,200, so that came as a big shock to people. It seems to be coming back, but then all the oil and gas stocks came off. I mean, 20%. Of course, Reliance is a big chunk of it. But if you look at the highs of oil and gas versus where they all are now, they've all come off quite a bit. So at A, you've got the performance of Reliance going back into going up with the oil and gas stocks and the energy stocks. And B, you're looking at the fact that they are planning some financial engineering or listing of Jio and all, which will put value back in the stock. So it's a very difficult stock to analyze. I think that's the problem. And I think that there must have been some, obviously with AFI selling, it's a big holding in everyone's portfolio. So they've decided to lighten up, and that happened before year end. And now it seems to be correcting itself slowly. So all in all, I think it's probably time to get your fingers or your toes wet and come back into the stock if you've got out.
Okay. So Reliance is interesting. So Pashupati, hi, afternoon, Rima here. You didn't like IT when we last spoke to you. You liked pharma. What are you doing now? How are you constructing your portfolio? And any new ideas that you'd like to share? Any new stocks you bought?
So what I'm looking at is that I'm looking at which are the sectors that have got hit. Okay, pharma has not got hit at all. I think the index is off maybe 2-3%. IT also is off maybe 5-6% from the highs. I'm talking about from the 2024 highs. So I feel that I particularly don't. I mean, people like IT because the rupee is getting weaker against the dollar. I personally feel that long term, AI is going to change the way the game is played, and I think that I'm not sure that our IT companies can actually move that fast. The flip side of that is that if people don't use Indian IT, they're not going to use any IT at all. And I think that they also got hit because of the H-1B controversy in the US, on which a lot of Indian companies depend. So I think that that's also part of the game. But I think in that, the Trump, Elon Musk gang will win the H-1B situation. I think it's going to be easier to get visas to get our techies into the US. So, but I'm still not comfortable with IT. Where I am looking is energy, oil and gas, a little bit in cement, autos, just to see where the values are. And there have to be values. I mean, of course, auto sales came in December. They weren't as good as November. So people were very upset. But I think that, things are going to settle down, and people are buying autos. And I guess the toppers like M&M and, maybe Eicher, I guess, have done well.
So which auto stocks, Pashupati? Is it Eicher and M&M or any other stocks in your portfolio?
No, so those are the blue-eyed ones. And I'm not so, the other thing is I'm not sure where the tractor market is going and whether there's going to be renewals. So I actually need to take a look at that to see whether, there's some value there. But of course, Eicher and M&M have been, roaring up, and I think they're showing a bit of a correction now, but I don't think they're going to go down too much. That's my personal feeling.
Pati, hi, good afternoon and season's greetings. Wish you a very, very happy 2025.
Hi,
I can say years come and years go. Pashupati always looks the same, just absolutely, timeless. And we always benefit from your wisdom through so many years. So great to have you with us. I wanted to talk to you about one space where you were an early mover. These new age companies. I remember discussing Zomato and Nykaa, some of these names with you. Even Paytm, I think you got in, and then things went kind of south. But you've been watching these companies up close for a while now. Where are you on food delivery and quick commerce? Because I don't know now whether it's getting a little too crazy. 10-minute delivery, 15-minute delivery. People are launching newer apps. Our colleague was just reporting Swiggy is now launching a brand new app apparently for 15-minute cafe-style delivery. Still value or still value?
Is that going to be a subscription app? It probably has to be, to get money in the till. No, but honestly, I'll tell you, the Chinese have been able to do it. So, I mean, in sense, we really should be able to, if they do it in 10, we should be able to do it in 15. And I think that is happening. Our marketplace has got disrupted so that, deliveries are faster. What was surprising me was something like a Jubilant, where they were saying they were delivering pizzas in 10 to 12 minutes. And I think that is like, unbelievable almost. But they happen to be doing it. So I guess, with a number, if you're within a certain radius of a Jubilant outlet, you're getting the pizzas in 10 minutes. So good luck to them. But I think, everybody has got these new age things. They're here to stay. I mean, everyone's homes, they're no longer cooking as much as they used to, and they're now outsourcing. The question is that our economy is still buoyant. If our economy turns, then obviously these new age people will come off, because then people will say, okay, we've got to save money, so we'll stop eating food from out, even though it's coming from Zomato or Swiggy. But going back to the new age, Paytm has always looked nice, but then there were some regulatory things against it. One is that it was Chinese owned, and second is that they took away the bank, and then they've become a payment gateway. So there's been some. But despite that, it went from 600 to 900 in probably 2 to 3 weeks. So it's still good, but I personally think it's a little expensive at 900. But I think that there is some story there. Zomato, Swiggy, they're slugging it out. Nykaa, the challenge is that they've got now a couple of new brands that have come into the space. One of which is owned by Reliance. So I think that's going to be a challenge for them. And I don't know. I mean, the Reliance brand is consolidated in Reliance Industries. Nykaa is a standalone. So they seem to be slugging it out in the streets. And the fourth one was Policy Bazaar, which seems to be chugging along nicely, and was one of the new age ones. But it goes back to are IPOs worth it? They all came in 24. What happens? And what about the IPOs that are coming now? And I think that's a different game. And if you look at IPOs 1 year down the road, most of them have not done too well. And there are a few jewels that have sort of doubled and tripled, but those are really the few. And how you find them is, I guess, what we all get paid to do.
Okay, all right. Hi, Mr. Advani. Good afternoon. Good to see you, Ben. Very quickly, before we let you go, there has been this slowdown in terms of capex spend, which is suddenly now gradually coming back in the last month and a half or thereabouts. But you have been broadly positive, a couple of these stocks. I think we've discussed L&T in the past, J. Kumar Infra as well. What's the topic from that space now?
See, I don't believe that the government is still driving the economy with their own spend. I don't think they have let up at all. So I think all the infrastructure companies have to continue to do well. The index as a whole is off maybe 12, 14%, something like that. But I think that there are jewels within this that will turn around and go back up, because, okay, there may be a lull. Maybe they're waiting for the budget, which is in 2-3 weeks' time, and then they'll give some further allocation. But I think that's a space to be, because it is a proxy for the growth in India. We need more infrastructure, whether it's buildings, whether it's roads, whether it's bridges, all sorts of things are being built, and railways. So definitely. I mean, if you look at the Nifty Infrastructure Index, it's down. Over the last from the 24 highs, it's off maybe 12-13%. So who knows what to do? But I'm very positive on infrastructure, and I think that's really one of the places to be.
Okay, all right, Pashupati, we'll leave it on that note for today. Thank you very much for joining in, and look forward to many more conversations in 2025. Well, on that note, we need to slip into a quick break. Come back on the other side. As always, all the buzz and chatter from dealing rooms today, and then some final trading calls coming up with Mitesh.
Welcome back. Nifty down marginally. Broader markets in greater pain in today's trading session. Not too bad a session considering we've recovered from the low point of the day. But let's get a better insight. Nimesh joins us to tell us what he's picking up on D-Street chatter. Nimesh.
Nigel, a good recovery in the Nifty, and that's largely because of some large cap names like ITC, Reliance. They are all supporting the large cap IT name. IT stocks have also supported the Nifty to some extent. But the bigger pain is in the broader market stocks. The index is on 1%, but a lot of individual damage is clearly visible. For the last couple of days, the way the mid cap and small caps have fallen, now it is giving it's impacting the portfolio investors as well. So there is a bit of panic now from larger investors on whether this will continue. A lot of the new F&O entrants are down 7, 8, 10%. So it's a bit confusing. There are no specific reasons for such sharp falls. But I guess it's largely because they've rallied so hard. And valuation-wise, this seems to be quite expensive, and that explains that you're seeing sharp cuts in the likes of Dixon, Paytm, and all those names. But those specific names, so to speak, or reasons for such a sharp fall today. From a flow perspective, again, it's a mixed day. But I've been saying for a while now that there is a bit of buying in the PSU basket. So again, there are flows in the select PSU names from the larger institutions. So that leg seems to be supporting the PSU rally in some form. I guess the sector clearly is the MFI stocks. The way the MFI stocks have recovered and have been rallying in trade, looks like the market is giving a message that maybe the bad news is pretty much priced in, and you're seeing a bit of recovery there. But it's basically the broader market pain which is now hurting the investors, and there is a bit of panic as well because the portfolios are getting impacted now.
Okay, all right. What about individual stocks, Nimesh? What do you pick up?
So, a lot of individual names are buzzing in trade despite a weakish, broader market index. So the first name is Poonawalla Finance. That stock recovered sharply from the intraday low after a large block. 60 lakh shares got changed hands. I understand it was a clean-out trade from a domestic mutual fund. So that particular fund has completely sold out its entire stake in Poonawalla Finance in today's block deal. So that's the first name. Second stock is Jaikumar Infra. Again, in a weak broader market, that stock is in the green. The volumes are on the higher side. And I understand a leading domestic AIF has been an active buyer of late in Jaikumar Infra. The third couple of stocks where there is delivery-based buying from the larger institutions, NMDC as well as Indus Tower. Both are been consolidating in a narrow range. But I understand some buying has resumed from larger FIs in NMDC and in Indus Tower. And the last name is IIFL Finance. Again, we've seen a bit of traction in the MFI stroke, NBFC names. IIFL Finance is in large volumes today. The flows are higher on the HNI desk. And the city is anticipating some sort of a corporate development as well in IIFL Finance very soon.
Okay, all right. The last one will come up on your screen. That was IIFL Finance. If we can have the graphic up. Okay, I think we'll be able to put the stock up for now. 3.5% higher, but buying there and some corporate development soon, as Nimesh pointed out. Stocks at about 436 or so. Nimesh, thank you very much for that. Mitesh is now with us with short-term sort of trading ideas, what to buy, sell today for a reverse trade tomorrow. Mitesh, what do you have?
Paytm is on the negative side, so SCBT here. Keep the stop around levels of 919 for a 890 kind of a target. Asian Paints, I had Berger Paints early. This is rebounding from extremely oversold levels. Maybe this will get some kind of a bounce back. So BTST here at the stop below 2320 and the target of 2360.
Let's talk about Paytm. There is a UBS note which highlights the company has failed to gain any market share in the UPI segment in the month of December as per the NPCI data. Abhishek joins in with the details. Abhishek.
Well, UBS has written on Paytm, they have a neutral rating with a target price of 1,000 per share. They say that NPCI data for the month of December indicates that, they have not, Paytm has not gained market share in UPI transactions in December. So this is post the approval to add customers from RBI that they had got in the month of October. So Paytm's share in UPI market is at 5.5%, which is flat when you compare to October and November. But this market share has declined from as high as 10% that they had in Jan of 2024. So this indicates that Paytm has not seen material MTU addition. So Paytm MTU, that is monthly transaction users, has come down from 100 million that they had in Jan of 2024 to around 68 million as of September 2024. Now MTU increase is very important given the fact that B2C offerings do grow from these numbers. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's get in Mayuresh Joshi, who joins us to help us out with analysis on a few stocks. Hi, Mayuresh. Good afternoon. Good to see you. Ben, what's your view on Paytm first? The stock has come off more than 10% from the recent peak. It's still far away from the IPO price. But what do you do?
Afternoon, Nigel. I think the stock also rallied quite a bit in the last few weeks and months, gestating a lot of positives and news developments that are happening around the stock. But genuinely, in my opinion, I think how numbers will play out is now extremely critical and crucial for future performance of the stock itself. So in terms of how the earnings play out, specifically from a Q3 perspective and the next couple of quarters as well, if the earnings are holding up, what you've just seen from the data points as far as UPI payments are concerned, how they're probably expected to garner market share amidst competition, I think all these elements are probably going to play out as well. And therefore, earnings are going to be very, very critical. So to a large extent, I think the price move has gestated a large part of positives that the street is actually expecting. If earnings are a positive surprise, then the stock might read it.
Okay, let's talk about Kalyan Jewellers. Now, the stock is down nearly 15% from yesterday's high. The Q3 business update was fine. The company said the Q3 revenue growth was about 39%. The India business revenue growth was 41%. The same-store sales growth was 24%. But what perhaps could explain the fall from the top, and now we're seeing that little bit of an intraday recovery, is that in the last 1 year, Kalyan Jewellers is up 8%, while Titan is down. Kalyan Jewellers is up 80%, while Titan is down 8%. So it's been a big outperformer, and therefore perhaps some profits were being booked. We had a chat with the management earlier today with the executive director of the company, Ramesh Kalyanaraman, who commented on the company's growth momentum and their plans to reduce debt. Listen in.
We have been consistently performing over the past many quarters, as you rightly said. And we don't see any change in momentum suddenly coming in the near future because our expansion plan is on track. Again, Q4 expansion is also on track. The momentum in Q3 was extremely high, huge festive demand. Again, the number of wedding days are more in the second half of the financial year when compared to the last year. So we don't see anything changing overnight. No, so margins are almost steady at the store level because, as you said, franchisee comes with a lesser margin than our own store margin, which everyone knows, the analysts knows, the market knows. Franchisee margins are lesser than our own store margin. But otherwise, on apple-to-apple store-wise margins are almost steady. Studded mix is also strong. The momentum is across gold, studded, and all other products at the store. So we don't anticipate any margin pressure at all. First of all, there are better ways to travel now across the country and outside India. We have facilities. So owning a plane by Kalyan Jewellers is not even there in our agenda. We are in a debt reduction strategy where last year also we reduced our debt. As we speak, the first half also we reduced our debt. While we reduce our debt, there are certain collaterals which is there in the banks. It is land parcels, which should ideally come out, which we will surely sell and bring back to the system. So as we speak, there has not been anything done on that side. We will surely target to at least start with it in this financial year.
Okay, that's the word coming in from Kalyan Jewellers. Mayuresh, markets seem to be favouring some of the underperformers of last year. Case in point, Reliance Industries, that's been higher for the last 2 days. Titan too has been under pressure. Last year it was a big underperformer, concerns about competition, the decline in gross margins, the disruption due to lab-grown diamonds. Is it time to go out there and buy Titan, or do you think not yet?
Afternoon, Mia. No, I think we'll wait it out. I think, obviously, I think a lot of data points that have been surrounding Titan, specifically as far as the jewelry segment is concerned. And within jewelry segment, I think one of the biggest misses that they probably got is the wedding jewelry part. They're obviously trying to plug this portfolio loss that they've probably suffered over the past few quarters to competition. But as they ramp up the wedding jewelry component, my own sense is that the jewelry business should come back on track, but that will take time because I think it is going to take time to probably have those designs in place to ramp up across their branches, so on and so forth. In terms of how it is placed at this juncture, my own sense is that unless numbers show consistent outperformance to what the street probably believes can get achieved by the company itself, and that starts coming through in terms of both the jewelry segment, their watches segment, as well as their precision engineering segment. I think the overall business construct still largely depends in terms of the jewelry as cash flows. And therefore, the wedding part as well as the studded part should start contributing meaningfully in terms of more launches expected to take place. And therefore, I think numbers will be better. At what point of time? Very, very difficult to say. So again, I think wait and watch on Titan at this point.
What about Reliance Industries? Are you going out there and buying it? Do you think this is the year for Reliance Industries? As perhaps Jio goes IPO, things improve for the oil and gas segment, the O2C?
So I think we will again expect a lot of price strength to come through because it has got beaten down in the past few weeks. But yes, I think all the trigger points that you're probably mentioning in terms of the financial services getting listed, what happens with Jio in terms of their listing as well. And the dynamics of the retail business should hold up well over the next few quarters. So Reliance Retail, Reliance Jio, standalone numbers in terms of the overall consolidated SOTP numbers of Reliance should perform well in the next few quarters. Obviously, the consumption slowdown that we're probably witnessing, you're also seeing some element of migration happening as far as subscribers are concerned on the Jio platform. But the SMS, that is the subscriber market share, the revenue market share should stabilize for Jio. Reliance Retail should have a steady show going forward as well. And with a large part of their operations, which will be tech-enabled, I think a lot of operating costs should be under control. Obviously, the new energy businesses, including oil to chemical that they're probably achieving at this juncture, and the new business ventures that they're getting into, biogas, hydrogen, as an example. I think a calibrated way in terms of their capex spends will mean not excessive leverage building onto the balance sheet. And at the same time, I think return ratios not getting hampered with too much capex probably put in businesses which will still take time to fructify. So in that sense, I think there are multiple triggers for the stock, but we'll wait for some element of price trend to come through. But yes, it does make a compelling case.
Okay, compelling. Reliance Industries is compelling. Mayuresh, do stay on. We need to slip into a very short break. We'll come back with more.
Welcome back. Just one stock I want to highlight, TCS. Ahead of its numbers, the bulls, they are latching onto it. There's been a big open interest build up out there. The delivery is higher as well. So the street is sensing that this is going to be a good set of numbers. Let's see how that goes. We'll keep an eye out on that particular stock. Well, let's get some opinion. Bernstein says that the macro situation has bottomed out. We spoke to Mr. Venugopal Gare, the Managing Director, India Head of Research at Bernstein, to understand their strategy, their view on the markets for the year, and what sectors to invest in. Let's listen into a slice of that conversation.
We are in a situation where, to a large extent, in my view, macro has bottomed out. Bottoming doesn't mean that we are going to swiftly move up to an amazing economic story this year, but yet bottoming itself is a pretty interesting thing to watch, because when macro bottoms, you also tend to see incremental earnings risks also tend to reduce beyond what you would have already modeled, which is pretty much setting up you for a situation where in this weak phase, in my view, one should be buying stocks. So we've sort of reversed our stance of being cautious to not buying in general to a situation where we want to be a bit more proactively this year, especially in the first half when things are weak, to be buying equities. At this juncture, we are overweight financials with a slightly lower weight than we had last year. I mean, the idea is that macro bottoming out and recovery is still a 2-3 quarter process. So we're going to probably strengthen our weights on financials through the year, but at this juncture, we're overweight financials. IT services, we've actually increased weights. I would probably say that these are the ways in which we are sort of playing. We are still sort of neutral-ish on consumer, even though we upgraded consumer staples from an underweight to sort of equal weightish per se. And the sectors which we still don't like are sectors like industrials, where we think that they're still overvalued. And the better way to play that is through utilities. Look at the broader thinking about economy itself bottoming out. And there are a lot of things which did not play out last year. For example, CapEx did not play out last year. Consumption was, in general, fairly weak from a YOY base perspective as well. These are the things which would start to pick up in the financial year FY26.
All right, so that was the Bernstein view, which we got earlier in the day. And Bernstein is now getting a little more cautiously optimistic on the market, looking at buying ideas. Mayuresh Joshi of William O'Neill is with us on the show. Mayuresh, great speaking with you this afternoon, and season's greetings. Happy New Year to you. I want to sort of talk to you about some of the real estate stocks, because the Q3 updates have been a little mixed. For Sobha, for instance, I mean, it's been a little sluggish. But on the other hand, today we've got an Ashiana Housing. The stock's running away because they've doubled the total area that they've sold in the third quarter. How should we look at it? And if you were to buy something afresh in real estate, what stock would you pick?
Season greetings and New Year to you as well, Surbi. So I think the segment is going through its phase of growth. So I think the 6-7 year cycle, we are probably in the 4th year. So I think the cycle still persists. Obviously, I think the high premium segment within real estate has been performing really well. And what has really transpired over the last few quarters, as we all know, inventory levels probably at much saner levels as we speak. So I think these players are going to report better numbers across the pack. Obviously, there are going to be a few hits and a few misses as well. But our own sense is that generally, I think the pre-sales velocity would continue. The collections should be very, very robust for a lot of players within this space as well. And therefore, I think expectations in terms of deleveraged balance sheets would very well continue into 2025 as well. So as a space, looks very, very interesting. Earnings expected to remain strong. I think what we see as our EPS weighting standards, RS standards, institution holding as per Cancelim, a lot of stocks are probably fulfilling that. So stocks like DLF, Oberoi, Reality is something that we continue holding in our global portfolios. What we like is a proxy to the play. So Capacite Infra is something that we continue liking at this juncture. Our entire thesis is based on the argument that they've got a very, very strong order book in excess of 9,000 odd crores, which gives it revenue visibility over the next 4 to 5 years. They are in the right space in terms of high rises. They're executing for a large part of the private as well as the public space. The balance sheet is very, very strong. They're executing well, and therefore the margin profile and performance has remained very, very robust as well. So I think real estate as a pack is something we remain optimistic about. One actionable idea where our belief, when the EPS rating, RS rating, institution holding probably is working out well and should work out well, is Capacite Infra. So I think BBC players is something like that.
Where are valuations now for Capacite? It's done very well. From basically it's doubled in the last 8 months or so, right?
Yeah. Oh yes, absolutely, Prashant. So I think valuations are not cheap, but they're not too super expensive as well. So I think if they're able to execute well in this entire cycle, and what they've probably delivered in the past few quarters, if they're able to do that, our sense is that there should be far more consistency and stability in earnings that we probably map, which should probably justify the kind of valuations that they are probably expected to get or are trading at this.
I've got that. Any thoughts on Dixon, Mayuresh, with the 8% cut today?
So, Prashant, we continue holding the stock in our portfolio as a clear disclaimer. Obviously, all the news surrounding the EMS players, the expectations in terms of more orders expected to come their way, expectations in terms of the margin profile actually improving. Though it will take time, because I think you need to understand that the ODM part takes time to build up. But the kind of backward integration that Dixon is probably expected to ensure with their supply chains is expected to provide far more stability in terms of their overall market performance. And therefore, as a construct in terms of order wins, PLI schemes, backward integration, China plus one, the manufacturing thesis, which should pick up further steam with more orders expected in new areas like semiconductors, which are already present in PCB circuits, should augur well in terms of the outlook that the stock probably has. It's taken a beating because of the advanced GDP estimates, in my opinion, which has come out, where the street probably believes that production, manufacturing might actually take a hit as we head into FY25. But I think it lies in a very interesting space, and the overall EMS space is itself expected to grow 4 times over the next few years. So I think there is a structural story to this. Obviously, valuations remain sky high. We are invested in the stock at far more price.
Okay. All right, Mayuresh, stay on. We will just wrap up the day's action and come back to you for some more thoughts. By the way, United Breweries was one of the stocks in focus today, and there's some further clarification. Our colleague Sudarshan has managed to speak to the excise commissioner of the state of Telangana. And I think the commissioner has clarified that the state does not have any pending dues to the beer industry. So that kind of removes a lot of the concerns and worries, considering that UB will not be now supplying to the state, but they don't seem to have any receivables, at least that's what the state government is indicating. Anyway, that's one stock that was in focus. Let's look at the overall broader market. Recovery has brought the Nifty almost back to the flat line, so it's not bad at all, just about 22 points lower now. And it has been Reliance to the rescue today. Reliance, along with the, its peer ONGC from the oil and gas arena. These have been the two big, tall, stocks in the market on the upside. But it's not just them. ITC and TCS looking very, very smart, actually, ahead of numbers tomorrow. Almost a 2% recovery there as well. And then you had stocks like Wipro, Bajaj Finserv, HCL Tech. These were the key names that were up and about. I must add that the Bank Nifty, however, has underperformed. The Nifty has cut most of its losses, but the Bank Nifty seems to be going home with a cut of about 0.7%. So that picture hasn't changed. Shriram Finance, Apollo Hospitals, Trent, Adani Ports and L&T. These are some of the key losers. This is the large cap picture, but I think, quite large moves in the mid cap arena as well, Prashant.
I mean, lots of moves really which came through. And maybe we can give you a quick sense of what really went on. I'll start with, of course, names like Dixon, etc. Paytm was a big cut today. You had KEC, Lupin, there was IGL, PCBL, Soba lost a fair bit of ground, Jubilant and Greva, and these are all names with decent-sized volumes. Saregama, First Cry, so a fair bit which was down. Market breadth was firmly lower, 3:1, more than 3:1 actually, with losses exceeding gainers. The microfinance companies, but actually, names like Fusion and Spandana really bombed out. Credit Access, of course, also lost 50% of its value from the highs and has now bounced about 20% from the lows, 800 to about, I think at the high, it almost got to about 1100 or so, and then cooled off a little bit. But I think was up 17-18%, ended 10% higher, Credit Access. So that's the strongest name in a sector which is facing a fair bit of headwinds. Apart from that, on the gaining side, Shakti Pumps another 5%. Shoppers Stop, names like Ami Organics, Phoenix, the mall operator, Anantraj are some of the other names which sort of moved around. Actually, the close today, after all of what happened through the course of the trading day, close is exactly similar to the open. 23,700 or so is where we started, and 23,700 is around where the Nifty is finally ending as well. It's a wrap on this edition, a closing bell. We'll, of course, take you through markets forward, which comes right up, and all you need to know as you look forward to the next trading session. Surabhi and I take you through that. Stay with us.